Welcome back to the channel, everybody. I am Mick Alpha Name. I hope all you beautiful, strong people out there had a fantastic day. By the time you get this, it'll be the evening. Hope you're having a good evening. This article is from Coinpedia.com and it's titled Ripple IPO. Everything's lining up for us, folks. Ripple IPO could cause 20x surge in XRP price. Now, I don't know about you, but I like that. I'm here to make some money. It says could cause 20x surge in XRP price. Predicts Wall Street expert. How many experts have to come out and tell people, hey, wait a minute. There's a myriad of catalysts that could send XRP to the freaking moon. Pardon my language. I usually don't use language like that. Freaking, you know, family. This is a family friend. Gotta keep this channel family friendly. Wait a minute. But if XRP goes to the moon, you do know it will drag XLM up with it. You do know that, right? Anyway, so this expert says this. Let's see what they're talking about. It says blockchain researcher Colin Brown has predicted a 20x surge for Ripple's native token XRP amid speculation about Ripple's potential initial public offering. September 28th is a pivotal date, with experts predicting a potential XRP price surge if the IPO materializes. IPO or settlement says, what will Ripple pick first? Either way, it'll have a massive, it says consequence on the XRP price. I would just say impact. His consequence is more of a negative energy. Like, am I reading that correctly? Like, when I hear consequence, usually nowadays, right, it has like a negative energy to it. So I'm going to go with impact, right? Impact on the XRP price. And it says here, let's dive deep. I don't think we have to go that deep. I think we know why, right? But here, they have a lot of different references. It says, is the delay a strategic move based on the recent dialogue with the SEC? Ripple Labs, led by CEO Brad Garlinghouse, is considering going public through an IPO following their recent legal resolution with the SEC. Okay, wait, am I missing something? They're talking about the court case? What do you mean recent legal resolution? They're talking about what happened in the summer? Or did I miss something? Wait, let's keep going. It says, do we see it as a settlement hint, as this is the only way to end this ongoing hue and cry? I don't proclaim to know everything, folks. I can miss things, you know. It says this move aims to establish XRP as a bridge currency for international transfers, a goal gaining traction in the crypto industry's adoption of digital assets for cross-border payments. It says XRP needs an IPO pump. I won't say it needs an IPO pump, but will we take it? Yes. Yes, we will. Whatever's going to make that price go up and you know, and we can play, we'll take it. No problem. It says here, Ripple's potential IPO could have substantial impact on XRP's price. An IPO's added attention and credibility will boost adoption, channeling long-term growth. Moreover, the capital infusion from an IPO could be pivotal for Ripple's global expansion efforts. Wait a minute. What happens if all of these things happen at the same time? Did anybody ever consider that? Ripple IPO, right? The flood of capital coming in because of ETFs and things like that, that BlackRock and Valkyrie, Wisdom Tree, all these large companies on the side are waiting to flood crypto with money. By the way, I have an article about that coming up real soon, like the next 2 chapters. Regulatory clarity across the board, maybe even globally, right? Because I'm looking at 2024, 2025 to be massive years. If you haven't seen that last members only video, watch that last members only video. And then the article that's in there, if you get a chance, look up that article, read it for yourself. And then you're going to start to see all of these different pieces of the puzzle are starting to fall together, right? And I mean, it's something is happening right now that's never happened before. Everything is coming together right now. So could you imagine all of that happening together at the same time? And of course, that would lead to that flip of the switch moment, because XRP can't be dirt cheap, number one. And number two, for years, you've had David Schwartz letting the people know over and over again, yes, that A higher price XRP, this is around, it's kind of similar to what he's saying when he says XRP can't be dirt cheap. A higher price XRP is better for everything, for its function. He's explained that a numerous amount of times. So, I mean, everything is lining up. Let's move here. Okay, I want to move to another article. Now, this article is titled, it is from the dailyhodl.com. Let me give them their credit. Dailyhodl.com. It's titled, Ex-Goldman Executive Says Liquidity Injection Will Ignite Explosion in Crypto Space Amid Rapid Building. Once again, we just heard from this person. You see, this is how a lot of these elitists do. They try to let the regular people know. So that way, later on, when the regular people are like, hey, you know what, we weren't able to get in and get rich, and they buy at the top, you know, they come in late, then there's no guilt on the parts of these elites who have really sabotaged the industry and kneecapped everybody. You know, it's sort of like a karmic thing. They feel like if they tell you something first and then you don't act on it, then that's on you. That's how they feel, right? So they're telling the people, multiple executives, multiple reputable individuals telling people that there's a tsunami of capital coming, some even using my phrasing, trillions, right? Which is just the truth. Right? That's just the truth. Trillions are coming. Well, I won't say it's the truth, but that's what the data says, that if everything goes according to plan, that there's trillions coming, that more balanced, right? I don't want to seem too absolutist here, but let's scroll down and read this because there's a big time period ahead coming. I don't know. I'm thinking 2024. That's how I feel. I'm seeing a lot of articles saying 2025, but I just feel like it's going to happen in 2024. I could be wrong. It says, former Goldman Sachs executive Raoul Pal, he's been talking for like 2 weeks now, trying to tell people, hey, trillions are coming. Let's hear what he has to say today. This executive Raoul Pal says that the next wave of global liquidity will likely send the crypto space into a frenzy. Hasn't that been what I've been saying? I told people. So those people who are in position, I mean, listen, I'm not expecting you to share in my excitement. I'm not trying to make anybody excited. This is literally how I feel. I am who I am, right? So what I'm saying is I'm feeling excited right now. That's why I'm talking like this. I have a lot of thoughts. That's why I'm like kind of stuttering over my stuff here. But man, those who are in position, just my humble opinion, oh man, it's going to be a big, big event. That next bull market is going to be way bigger than the last. I keep saying it. But let me read that again. Let me calm down and read that again. Former Goldman Sachs executive Raoul Pal says the next wave of global liquidity will likely send crypto. Now, this is an individual who usually is just solely pro Bitcoin, correct? He said, no, he can't even deny it. They can't. Everybody, all the top projects are going to go boom. The legit projects, the legit top projects stand to go boom. Not financial advice. I'm not a financial advisor. All right. I'm not trying to convince anybody of anything. We're just going over the article. I'm giving a little bit of my opinion. That's all. But we all know the truth. Let's keep going. It says in a new discussion, he's going to keep talking about this. And then when he gets quiet, this is when people need to start really watching things. But before that time, I'm telling you, there's a few black swans. And so I'm keeping my eye out. Treasuries just were selling off. Treasuries were selling off. Are they going to raise that yield again to bring the people back to treasuries? I think that they might. So then you got to keep your eye on that. I mean, there's just so much going on, but let's keep going. It says in a new discussion on Real Vision, Powell says he was encouraged by the sheer number of people working on interesting projects in the crypto space at the recent Token 2049 conference in Singapore. Let's scroll down here. It says, quote, if you step back, the space attracts an astonishing amount of smart people. I've never seen anything like it. I told you. And this is why it's important to go towards the projects, my humble opinion, not advice, but the projects where you have brilliant minds at the head. You have bang up teams. You have knockout teams. And this is what I'm saying. So you look at HBAR, but you look at projects like Hedera, where they have Lehman Baird. You look at projects like Quant, Gilbert Verdian. Look into these people's background. Know who's leading your projects. The minds are important. Look at the team Ripple put together. Oh my word, it's unbelievable. Led by the esteemed James Wallace, who gets things done. Monica Long, who gets things done. I mean, it's just unbelievable. But that's very important. And as you see, this quote unquote expert is looking at that as well. It says, I've never seen anything like it. The intelligence is where the money is going to be. I'm telling you now. It says, and everybody is down their deep rabbit hole trying to fix some part of this. Everything was there, from gaming and how to take away the monopolies of Apple and the control over who takes payment systems. Then I tell you, we can dominate who takes control over payment systems. Then we read the article yesterday. Was it yesterday or the video before? Where we uncover Swift is concerned about losing control. Who are they concerned with losing control to? Why would they be concerned with losing control if there wasn't a threat? You get it? You see where this is going? We're in prime position, folks. Something's going to happen. I don't know what. Something's going to happen. I think it's going to be really good. So all of this stuff within the gaming economy and the apps economy and the cultural economy, there are other people trying to solve payment rails. Who? Oh, it's getting big. It says, there are other people trying to solve the infrastructure layer. Some of us do all of it. We do payment rails. We do infrastructure, right? It says, there are other people. Who's he talking about? Who's at the top? Who's at the top of that? Ripple, Stellar, Algorand, huh? It says, there are other people trying to solve the finance system and how we can put finance on the blockchain. So it's so broad and its tentacles are everywhere with these extraordinary groups of smart people. It shocks me every time because it gets reduced online to Bitcoin and ETH. This individual who used to be an extreme Bitcoin maxi is waking up because he sees what's coming. All this potentiality out there, and he wants to make lots of money. Like we all do. So he's starting to wake up and say, wait a minute, there's a flood coming. That's why he's been ringing the alarm. And the legacy system has been on fire, burning to the ground. You've heard a lot of economists tell you that, haven't you? A lot of economists, a lot of analysts, a lot of pros and experts, etc. Says here, when you actually see the magnitude of what is being built, and by the types of people and the kind of smart capital, unquote. They stop there with the quote. It says, the macro investor says, while prices are generally quite far from the historic highs, the industry still has its head down, building new things. And this is another thing I've been trying to emphasize as well. It says, which bodes well for its future. He says that the next influx of liquidity will likely drive markets upward and into the next bull run. Quote, here's another quote. It's an ant colony and it's anti-fragile because it's an ant colony. As soon as liquidity comes back into the space, you're like feeding this ant colony and everything comes alive. Once again, I've been trying to iterate that as well. Then I say that a lot of people will come back. They will, first of all, they will want that capital. They will want to make a lot of disgusting capital. That's number one. Number two, a lot of people need it now because economies are just doing so terribly. They need a little extra capital just for living, right? It will all, and then there's going to be newcomers. Then not only that, now the big money is on the side. They've taken over a huge chunk of crypto. So they're going to be there as well. So much more capital will play this time around, in my humble opinion. It says here, as soon as liquidity comes back into the space, you're like feeding this ant colony and everything comes alive. So it's very clear to me when I see it, it's like everybody's head is down building, doing their thing. And the moment liquidity comes in, the whole place explodes again, unquote. Powerful. You know, I'm starting to like this, Raul Paul. Starting to tell a little truth. You can't get away from it, can you? All right, so now we're going to move on to another article here. Oh man, I like these articles today. It's pretty good, right? So, in my humble opinion, I don't know. Somebody out there might not like that news. I can respect that. This is from the cryptobasic.com and it's titled Ripple CTO. XRP at higher prices is a better vehicle for payments. We've heard him say this time and time again. The people don't want to believe it. All these banks lined up. They're going to have layered systems, folks. Little piece of the legacy system, little piece of our system, but we connect everything together. Higher price means what? Logically speaking, and this is like, I think it's similar on Stellar, right? Stellar is very, very closely related to the XRPL. But the higher those prices go of, like, let's say XRP, the more cost efficient the chain is supposed to be. Now, but also if you throw in payment channels where they can only use XRP, and there was an article I read. I don't remember, and I don't think I covered it last video, but I should have, where David Schwartz was saying something. Now, correct me if I'm wrong. He said something like, if they use the XRPL, then they'll have to buy XRP, right? Something like that. I don't know why it was phrased that way, because they can utilize other assets. Maybe I read that wrong. Right? But I would think that would be said. And like I said, maybe I'm wrong and you can correct me on that quote. Maybe that's said because XRP, like I said, is the best thing that they have on the XRPL. It's the reason to use the XRPL. If you want to use everything else, there's a lot of good blockchains out there that you can use stable coins on, etc. But if you want the best of the best, then you go to XRP, you go to XLM, you go to Algorand, correct? So if you're coming to the XRPL, I would think it's because of XRP, especially, once again, payment channels. So if you're coming to the XRPL, you're a big money bank, you want the lowest cost possible, then you would need to use XRP. And it doesn't matter whether you hold it or you're using it on a consistent daily basis, because let's face it, banks want they want 24 hours a day, 365 days a year service. And that's what they're looking for. And we can provide that. That means constant flow of XRP. Okay, so if there's constant flow of XRP at some point within a network of banks, right, then what does that do to XRP's price? It's not even about holding it. I think it would be smarter to hold some. Really, I would just take it off the market. That would be easy to take it off the market. But they don't have to completely take it off the market. It will raise that price up. It will price everybody out. All the little people, it will price out. And there will be a ton of liquidity, which is what we want, right? We want liquidity. They want liquidity. Liquidity is where that big money is. So first we have to get past this SEC case, and I have to get an update on that, see what's going on there. But get past that SEC case, and then we can play. Then you can see XRP and that liquidity hub, and it can do what it was always meant to do. The liquidity hub is nothing without XRP. Remember, they have a patent for on-demand liquidity for a reason. So we've done a lot of great things, but we have yet to even see the massive impact that on-demand liquidity will truly have on the XRP price. I'm definitely looking forward to that in the future, right? So now let's move on here. So higher price XRP is better. It's what David Schwartz is saying, right? For everybody, which has huge implications. So now this is from payments.com and it's titled 85% of large retailers look to fintechs for real-time payments partnerships. They need us. The Bank of International Settlements told them, hey, go hand in hand, keep a tight relationship with the private sector, with the fintechs. We are the way. We have the technology. We have the minds, the most brilliant minds. This is why it's important for companies like Ripple to continue to win that award for treating your employees well. So that way we don't have defectors going to the legacy system. No, they want to work somewhere great. They want to make history. They can come down, and then they want to make some good capital. They can come work with us. So far we have maintained that stranglehold on some of the most brilliant minds. Don't get me wrong. You have a lot of good minds going to the legacy system, but we've already scooped up the best of the best when it comes to the bank coins. But this is very telling here. 85% of large retailers look to fintechs. That's a lot of money on the table. That's a lot of capital. And if we're going to be working with them at some point in the future with these B2B payments, that's going to be huge. We've discussed it before. Let's read this little tidbit here. It says, the allure of real-time payments is not lost on retail giants, which they need. Badly, they need our services. There's been a tsunami of bankruptcies. Have you seen how many businesses have gone out of business recently? There's more bankruptcies to come. But let's keep going. It says nearly all retailers generating $100 million or more in annual revenues have embraced real-time business-to-business B2B payments. 54% plan to make more of these payments in the next year. Once again, let me pause there. Once again, that's another reason I'm looking at Solana like, hey, what's that you're doing with the non-banking financial institutions? Who was it Solana was working with? Was it Visa? Hold on. Solana, Visa. Let me just type that in very quickly. A deep dive on Solana. No, that's not what I'm looking for. Wait. That's what it was. Visa expands stablecoin settlement capabilities to the high-performing Solana blockchain. This is just where they're beginning, so I'm keeping my eye on them. And it's just more proof that they're looking for some way to get a leg up. Keep in mind, Visa also has a relationship with Hedera, right? Via FIS. FIS sits on the advisory board of Hedera. At least that's what it used to be. I don't know if they're still on there. I'm pretty sure they are. But then FIS has integration with Visa. Interesting, right? Also, Visa vicariously has a relationship with Stellar. I don't know if that's still the way that it is, but if you remember, they had a relationship vicariously with Stellar via Tala, a company called Tala. Whatever happened to that company, I don't know. I haven't had an update on them in quite some time, but I'm just putting out there the facts as I know them. You can look all of this up. But once again, that's more proof they're looking at us for solutions. Let's keep going, which is very, very good. We want to take those trillions. It says here, quote, corporate changes in payment practices. The retail industry is ramping up real-time payments. It says we collected responses from June 6 to June 26. The survey investigated the state of real-time B2B payments in the retail industry. We asked respondents about their firm's current use of real-time payments and plans for future use, among other topics. It says, other key findings from the report include large retailers invest heavily in real-time payments and view them as crucial to their success. Crucial. So they have to make a push for something that's crucial. And that time period has to come to pass if they're making a big push towards something that is crucial. It's just a matter of when, not if, when. So signaling a shift in B2B payment preferences. Virtually all retail firms, okay, to reiterate what they said at the top. Let's move down here. It says for the retail sector, real-time payments are more than just a quick payment method. Retailers recognize the benefits that real-time payments have beyond payment speed. For example, 89% of large retailers cite enhanced buyer-supplier relationships as a benefit of this method. Most view the data protection and security of real-time payments as key advantages. It says retailers are more likely to partner with fintechs than banks. We're going to take that money. I feel it in my bones, deep in my soul. We're going to take that money. Let me say that this is from payments.com. Let me read that one more time. Retailers are more likely to partner with fintechs than banks for real-time payment innovations. Anyone who's hearing this right now, we're living through history right now. We're a part of it, big part. It says here, our research reveals 81% of retail firms plan to enhance real-time payment offerings in the next year to meet growing demand. Let's move on to another article here. Mass adoption is coming. The new financial system is very, very near. I think we're going to see a lot of magic happen in this next year or two. My humble opinion, 2024, 2025 will be massive. My humble opinion. That's not a guarantee. I'm not in control of anything, but this article here is from ledgerinsights.com and it's titled mBridge. Remember that? mBridge cross-border CBDC platform prepares for launch. Now, let me make this very clear that they're going to start small like everybody else. They're starting out very, very small to test it out. Then they will scale it later on to a much larger use. But let's read this little tidbit. It says, mBridge, the wholesale platform for cross-border CBDC payments, is preparing to launch very soon. That's according to Eddie Yu, the CEO of the Hong Kong Monetary Authority, one of the 4 participant central banks. So let me pause there again. So just notice as we read this article, it's another siloed system that wants to go against SWIFT. They're going to clarify that in this article. If that's the case, and all of these systems are siloed, they're cut off, they're walled gardens, so to speak. They need something to connect them together, don't they? That's where we come in. And that's probably why Ripple has kept such a close relationship with the Monetary Authority of Singapore, the Hong Kong Monetary Authority, the BIS, etc. Right? You see? But let's keep going. It says, that's according to Eddie Yu, the CEO of the Hong Kong Monetary Authority, one of the 4 participant central banks. The others are China, Thailand, and the UAE, where we're also deep. We have good relationships with all of those countries. It says, Mr. Yu described the planned launch as a minimum. See, I told you small. They're starting small. As a minimum viable product that will pave, quote, the way for the gradual commercialization of mBridge, unquote. When the central banks and the Bank for International Settlements, they're always involved, I told you, shared the results of the last pilot a year ago, several additional banks had observer status. The key findings were it enables faster, cheaper, more transparent payments. There's a good chance they kept the group small precisely so the platform could reach production quickly. Large consortia are notoriously slow. From a decision-making perspective, the senior group is even tighter than it looks, given the UAE representative Shu Pui Lai spent 17 years at the HKMA. The observer central banks were Philippines, who's deep there, Ripple, Malaysia, Indonesia, Korea, who's deep in Korea, Ripple, Sweden and Israel. Staff from the London BIS Innovation Hub and Federal Reserve Bank of New York also observed. Now, there's somewhere in here where they talked about, I believe it was this article about SWIFT. Bear with me one moment, please. Okay, so right here it says this: whether or not these moves impact the dominance of the US dollar remains to be seen. However, currently SWIFT is the dominant infrastructure in cross-border payments. mBridge's launch, if it gets traction, could be a big step towards the fragmentation of global payments. So another system rising that we have supported, let's be serious, with the mBridge testing, we were involved, is trying to go against SWIFT, which means if the world is fractionalized, fragmented, multipolar, they will need something to connect these systems. I have an article somewhere in here where it's talking about how the US economy and the China economy are still sort of tethered together. So they're going to need to interact. They're going to need to be able to transact. How do they do that if they both have siloed systems? The BRICS nations are trying to stonewall and shirk the SWIFT system. And SWIFT definitely is not going to be very tolerant, depending on what the US says, towards BRICS nations. You've seen them kick out the banks from Russia. You've seen them kick out the banks from Iran. So, I mean, how much more of that may be done as time goes on, especially with a lot of this tension going on between the US and China to a certain degree. We will see. So we have the ability to connect all of this together. So now let's move on here to another article. I want to skip this article here and go to the Solana article. They have some interesting things going on there. I'm just keeping an eye on them. That's all. So now this article is on Solana. It's from the block.co and it's titled Solana Depend Projects aim to take gig economy to the next level. Well, the gig economy I've heard is in a little bit of trouble with a lot of the companies, not the actual people who work the gigs, but the companies hemorrhaging a lot of capital. They mismanage a lot of capital. At least that's what I've read. I don't know if that's accurate or not. It says here, decentralized physical infrastructure networks, DPINs, are reshaping traditional infrastructure models, providing an opportunity analogous to today's gig economy, according to Solana Foundation DPIN lead Kulin Nimkar. While many people today earn supplemental income from driving for Uber or delivering for DoorDash, over time, people can also generate additional income by contributing hardware to DPIN protocols, Nimkar told The Block in a recent interview. More powerfully, Nimkar argues contributors to DPIN networks can generate significant income, really, from supporting a network early on, earning tokens that later appreciate as the network grows. You know, they have a lot of interesting things on Solana, I noticed. I never knew that before. I never looked deeply into their project until they said that. Until they said they were working with Visa. When you cross over into that Bankcoin territory, I start taking a look at you. It says, quote, that's something that never happened with the Web 2 gig economy. Early Uber drivers didn't see an outsized benefit for supporting Uber before it became a giant, unquote, he added. It says DPIN protocols leverage token incentives composable with the broader DeFi ecosystem to help bootstrap hardware networks, offering services like computing power and storage. It says Nimkar highlighted Solana DPIN projects such as Hive Mapper, Render, and Helium as examples, incentivizing contributors to build network growth and reducing upfront investment costs compared to traditional infrastructure models. Interesting. All right. So I'm a little bit more educated now on that project. Let's move on here. I want to cover this a little bit about one bank coin and one of our original utility coins here, Polygon. This is from the cryptopotato.com. There's a lot of changes going on with Cello. So let's find out what's happening. It says here, Polygon Labs has suggested that the Cello blockchain community consider utilizing its chain development kit to streamline the intended Layer 2 migration on the Ethereum network. The proposal comes after C Labs, the primary development team behind Cello, unveiled an alternative strategy in July to transition its Layer 1 into an Ethereum-compatible Layer 2 solution by utilizing Optimism's OpStack. OpStack is a similar customizable toolkit that leverages Optimism's, quote, optimistic, unquote, technology. Move to Ethereum Layer 2 via Polygon CDK. Next section. This is Polygon Labs co-founder Sandeep Nalwal presented a proposal to the Cello community this week recommending that the blockchain ecosystem consider implementing Polygon's chain development kit, which is a code base enabling developers to build customized Layer 2 chains leveraging zero-knowledge technology. The proposal on Cello Governance Forum stated, quote, Polygon Labs is excited to welcome Cello home to Ethereum in the chain's transition from an independent EVM-compatible L1 to an Ethereum L2. As Ethereum devotees obsessed with scaling, I will say this, the only project I really, really like that is a scaler of Ethereum or a Layer 2 is Polygon. I like what Polygon, they do a good job. They really do. It says, unless there's another one I don't know about, I don't claim to know everything. This is Ethereum devotees obsessed with scaling. We are beyond excited to see Cello expand into an emerging and thriving Ethereum ecosystem and help extend Ethereum block space. All right. So we'll see how all that works out and how what it affects. We'll learn a little bit more as time goes on. Once again, like I said, one of the biggest use cases on Cello that I look out for is the universal basic income, which they seem to be rolling out in different areas within the United States. So I'm keeping my eye on that. Do they make a push with that? We'll see. We shall see. Everything in its own time. So now let's go here because mass adoption is on the horizon. This is from the dailyhodl.com. Big things are happening. It's titled Coinbase now registered as crypto exchange and custodian wallet provider with the Bank of Spain. Mass adoption on the horizon is happening little by little, but it's happening. It says here, top U.S. digital asset exchange Coinbase has successfully registered as a cryptocurrency exchange and custodian wallet provider with the Bank of Spain. Coinbase says in a new announcement that the registration will let the company offer its full scope of products, quote unquote, to retail and institutional users in Spain within regulation. Spanish users will now be able to access Coinbase's custody services, buy and sell digital assets using fiat currency, and trade crypto against other crypto as per the announcement. All right, so big things are happening. Good job, Coinbase. Good job. Sometimes I hold Coinbase's feet to the fire, but overall, I think they're doing a pretty good job, in my humble opinion. That's how I feel. All right, so now, just because I like you don't mean I'm not going to hold you to a standard. You know what I mean? And I respect, listen, it's the same with me. You know, anybody's close to me or something like that. If I do something wrong, I want to know, hey, maybe I should have stepped it up a little bit more. And I take that and I see if there's something useful there. If it is, I step it up a little bit more. Simple as that. No one is beyond being told, hey, you got to step it up a little bit. Hey, you got to do a little bit better. Nobody's beyond that. I'm not beyond that. Coinbase is not beyond that. All right. So now let's move on here. I'm going to skip this article here about the U.S. being tied to China because we know that they are. And we're going to move here to this article about 10-year treasuries. So this article here is from Morningstar.com. It says 10-year treasury yield can keep climbing from 16-year highs, says world's largest asset manager. You see what's going on here? Let's read this little tidbit. As the benchmark 10-year treasury yield established a fresh 16-year high above 4.5% on Monday, BlackRock Incorporated, the world's largest asset manager, weighed in with the view that it could go even higher. I knew this. I said this before. I knew it. It says the in-house research arm of the New York-based BlackRock, which managed roughly $9.4 trillion in assets at the end of the second quarter, said financial markets are coming around to the view that rates will likely stay high and that a volatile macro regime is bringing, quote, uncertainty over central bank policy and risks ahead, unquote. I agree with that. Long-term government yields jumped across the Americas and Europe on Monday as investors absorbed a higher for longer message on interest rates from the Federal Reserve and other central banks. They don't know what they're doing. They're so confused and just they just don't know what they're doing. They just don't. On Monday, I mean, they go this direction, then they pull everything in that direction. It's a repeating cycle. On Monday, European Central Bank President Christine Lagarde told European Parliament lawmakers that borrowing costs will remain elevated for as long as needed. The Swiss National Bank, they're crushing everything in sight, folks. Get ready. Hold on to your blazers. I'm telling you. The Swiss National Bank is continuing to monitor inflation pressures and is not done with its war on inflation. All right, we're going to stop there with that one. Let's get to the mortgage news. I want to get all this news out to you. I'm trying to give you as much quality articles as I possibly can, get you all this information. This is from cnet.com and it's titled Mortgage Rates, always with the mortgage rates. Mortgage rates on September 25th, 2023. You think they went down? Rates increased. They increased. Of course, why not? Some key mortgage rates have ticked up. If you're in the market for a mortgage, see how your payments might be infected. Yeah, definitely they are infected. I messed up there, but yeah, that's expedient. See how your payments might be affected by inflation. Yeah, they're infected by inflation 100%. It says a variety of important mortgage rates went higher over the last 7 days. The average interest rates for both 15-year fixed and 30-year fixed mortgage rates both drifted higher. For variable rates, the 5/1 adjustable rate mortgage also ticked up. In March 2022, the Federal Reserve stepped in to combat surging inflation by hiking its key interest rate that we know. Let's skip that part. After hiking interest rates 11 times since March 2022, the Federal Reserve opted to skip another increase during its September meeting. We know that, but they're just holding steady. It's not like they're bringing things down or they're cutting or something epic like that will really, make people jump for joy. But let's keep going. It says here, while inflation has dropped from its record highs, it went up again a little bit recently, didn't it? All right, so that doesn't matter to me. Let's continue on here. I'm keeping everything in the proper perspective, in my humble opinion. 30-year fixed rate mortgages, because it's like, oh well, it was It skyrocketed, but it came down a little bit. But yeah, but you're not saying it went back up. So they haven't solved the problem yet. It keeps going back up. It says 30-year fixed mortgage rates, fixed rate mortgages. The average 30-year fixed mortgage interest rate is 7.64%, which is a growth of 9 basis points compared to 1 week ago. A basis point is equivalent to 0.01%. 30-year fixed mortgages are the most common loan term. A 30-year fixed mortgage will often have a greater interest rate than a 15-year fixed rate mortgage, but also a lower monthly payment. 15-year fixed mortgage rate section here. The average rate for a 15-year fixed mortgage is 6.86%, which is an increase of 6 basis points from the same time last week. Unbelievable. Compared to a 30-year fixed mortgage, a 15-year fixed mortgage with the same loan value and interest rate will have a larger monthly payment. 5-to-1 adjustable rate mortgages, a 5-1 ARM, has an average rate of 6.61%, an addition of 8 basis points compared to last week. You will typically get a lower interest rate with a 5-1 ARM in the first 5 years of the mortgage. However, you could end up paying more after that time. Mortgage rate trends. It says mortgage rates were historically low throughout most of 2020 and 2021, but increased steadily through 2022 as the Federal Reserve began aggressively hiking interest rates. The top question is what the rest of 2023 has in store for prospective home buyers. I think we can see that just going by the patterns here. Fannie Mae calls for the average 30-year fixed mortgage rate to close out the year at 7.1%. All right, there you go. There you have it. So we're going to close out here with a little bit of gold news today. So this article here is from kitco.com and it's titled Gold to hit $2,000 by the end of 2023 may reach $2,200 an ounce in 2024 as dollar weakens. We will see. We'll see. A lot of good catalysts for gold, in my humble opinion. Says while French bank Société Générale has slightly reduced its exposure to the precious metal, it still remains positive on the precious metal as inflation remains stubbornly elevated amid plans by the Federal Reserve to end its tightening cycle. Despite gold's lackluster performance through the summer, Société Générale, I don't know how they make this abbreviation. I don't know how to read that, is optimistic that the prices have a path back to $2,000 an ounce. I agree with that. Quote, headline inflation continues to cool, but core inflation remains stubbornly high, and the Fed is near its cyclical peak. As the timing of a potential U.S. recession recedes, these developments give the Fed the opportunity to keep rates higher for longer to fight inflation. This should keep real rates elevated and, combined with a strong dollar, creates headwinds that should cap gold prices at or below $2,000 an ounce to the end of this year, in our view, unquote. The bank's commodity analyst said in their latest outlook report. Not concerned at all, but that sounds about right. Looking to the new year, depending on certain catalysts, but that sounds right. The analyst said that they could see gold prices pushing to $2,200 an ounce by the end of 2024 as investors realize how difficult it will be for central banks to bring core inflation down to their 2% targets. Yeah, they're going to have a lot of trouble with the methods that they're using. It says, quote, with a low-hanging fruit in the inflation fight already picked, we think the gold market will have to price in higher forward CPI projections. As a result, we see gold appreciating to $2,200 an ounce in lumpy moves by the end of 2024. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.